No one can predict what 2026 will bring, but there are some themes that have emerged on a consistent basis in 2025, such as tariff tensions and high valuations in the AI sector, making investors nervous. Morningstar has prepared a report with an outlook for 2026. Let's bring in one of the authors, Philip Straehl. He's Chief Investment Officer covering the Americas for Morningstar Investment Management. And Philip, thanks very much for joining us.
Thanks for having me, Roger. It's great to be with you.
Let's start off with the trade tensions. What kind of a factor do you see that being in 2026?
Yeah, I think it's settled in terms of some of the frameworks that have been put in place. But I think one of the things that is still an uncertainty at this point is the potential decision by the Supreme Court in the United States, potentially in December or January, with an announcement around their decision as to whether some parts of the tariff framework, whether that will be shut down. I think that will create some volatility. So as we look into 2026, we don't expect the April level, volatility, but certainly still uncertainty around there with the tariffs in 2026.
What kind of a twist would a ruling have that some of those tariffs were unenforceable? They'd have to pay money back. That could make for a bit of a nightmare for businesses.
Yeah, I would say actually the biggest trading partners, our expectation would be that those tariffs will just be shifted in terms of the legal statute. So there's probably not a huge impact. Some of the smaller trading partners, it might actually be a relief, but it will just create uncertainty in the market where markets will be wondering which sectors might be impacted. But by and large, we would not expect the same type of downside risk as we've seen in April of 2025.
And geopolitically, I mean, we're hearing possible talk of a peace deal between Russia and Ukraine. No guarantees, of course, with everything the way it's unfolded there. But I mean, there is talk of that. What kind of an impact would something like that? Are there any other geopolitical aspects that you're keeping an eye on?
Yeah, the Ukraine-Russia deal obviously would be significant in terms of the impact from a humanitarian standpoint. We'd say energy prices, oil markets would likely be most impacted by that. We've seen some downward pressure on oil, as you've pointed out this morning. And so it's mainly on the energy side, we would think, as far as, kind of the market implications, but obviously a very important deal as well. The second element would be defense companies, which have done very well this year, especially in Europe. And so a potential deal there would put potential downside pressure on defense stocks if that were to come to fruition.
And of course, the thing that everybody's talking about, AI, what's next for it? We had some pretty good earnings for the most part, still some nervous investors out there. Is that going to change, do you think?
AI has been the dominant theme for the past 2.5 years, really off of the low in April. That really was what reassured markets, and a lot of these AI stocks, NVIDIA, did very well off that low in April. But we think that there's probably been a level of frothiness and very elevated expectations that have been baked into some of those valuations, and we've seen a bit of a pullback in these stocks in recent weeks on the back of even beating earnings. And so at this point, it's probably more of a sentiment shift. But going into 2026, big question is whether those companies will stick to the CapEx plans that they've announced so far this year.
And they've been aggressive with that. Is that what's making most investors nervous then?
I think it's part of it. I think there's a technical element, as I mentioned, where I think the market's gotten somewhat narrow, especially in the September-October period. And in recent weeks, we've seen a bit of an unwind there. But if we were to see a pullback on the CapEx guidance by the large hyperscalers, I think that could lead to more significant downside. So our view would be for investors to try to diversify away from some of those large cap names and find opportunities perhaps in higher quality healthcare and consumer businesses, for example.
And yeah, healthcare's it's had a nice bounce back lately, and you still think there's some deals to be had, though?
We think so. Yeah, we think it's underperformed the S&P 500 for the third consecutive calendar year. It's kind of lagged the S&P by about 70% over that time frame. And so we still think that there's value. It has better earnings growth than the overall market. And we still think that there's room for some of that regulatory overhang to ultimately boost some of those stocks.
And outside North America, what are some of the things you're looking at?
We still like non-U.S. stocks from our perspective, especially if you are, from a Canadian or from a U.S. investor standpoint, given valuations, also from a currency perspective. We like Latin America as one of the areas. For example, in emerging markets, it's trading at Brazil, for example, is trading at 11 times earnings, and that's much more attractive than, let's say, the S&P 500. That's closer to 23 times earnings.
And also, you mentioned in some of your notes here, you're talking about the UK as well as an interest to you.
Yeah, the UK is, despite its, kind of economy that is, there's obviously different things going on with the budget there, but access to a lot of high-quality global businesses. And if you look at that market from a valuation standpoint, we can still see a lot of value in those businesses. And so, given the strong rally we've seen in many parts of equity markets, we think the UK is an attractive area to be as well.
And just one, we're almost out of time, but just quickly about South Africa as well. You're calling it a hidden gem.
Yeah, South Africa is one of the markets that we like, and we think from a commodity cycle standpoint, and given some of the pressures we've seen on the commodity side of things, that's an area that we like. It's an early story, and we might see some volatility there, especially if we talked about the geopolitical dimension, but it is one of the areas that we like as well within the emerging markets.
Okay, we're going to leave it there, but Philip, thanks very much for joining us.
Thank you, Roger.
Philip Straehl is Chief Investment Officer covering the Americas for Morningstar Investment Management.